Hi, I'm Jamie with The Saving Secret, where I help you be more intentional with your money. In today's video, I'm going to be talking about exchange traded funds, or ETFs. These are great financial products that offer you a low-cost option to buy securities or investments in your brokerage account. Similar to an index fund, but there are some slight advantages. And so in today's video, I'm going to be talking through some of those advantages of ETFs from a tax perspective and really talk about what is an ETF. And at the end of the video, I'll share a specific ETF that I personally invest in every month. So stay tuned, let's jump in. All right, so a lot of the information that I'm taking for understanding ETFs is actually written from a great Fidelity article. I'll leave a link in the description so you can read the whole thing. And I'm not going to read the whole thing, but this is kind of the backbone of where I'm getting the information to learn. So you can take some additional information if you'd like to about the benefits of ETFs. And right here it says ETFs can offer a lower operating costs than traditional open-ended funds, flexible trading, greater transparency, and better taxable efficiency in taxable accounts. That last line, better tax efficiency in taxable accounts, is one of the things that really got me intrigued. But then I really wanted to learn more about ETFs in general, and this was a great article. So they talk about, and again, I won't read it, you can read most of it, but I'll highlight a couple of excerpts that I think are important. But really, traditional mutual funds have been around for almost 100 years, whereas ETFs have come onto the scene really in the last 30 years, but have really kind of grown in popularity, and for some of these active reasons. So one of the things that they'll talk about is trading flexibility. And so specifically with mutual funds, you can only trade them once per day, whereas with an ETF, it's traded throughout the day and it fluctuates. For me, as a buy and hold investor, I'm not trying to time it or try to do any of those things. But for me, it's just important to know. Whereas an index fund, you can kind of buy, hold it, and repeat purchases without having to do anything. But here, you do need to purchase it during the open trading window. So that's pretty important. But here's one of the lines that I thought was important. The trade order flexibility of ETFs also gives investors the benefit of making timely decisions, placing orders in a variety of ways. Investing in ETF shares has all the trade combinations of a common stocks, including limit orders, stop orders. ETFs can be purchased on margin or by borrowed money by a broker. Not necessarily not something that I would recommend doing, but it is something to know that it has the functionalities similar to a stock. One of the functionalities that I like is because it's treated like a stock, I can use that money to donate stocks into to my giving account. And so I have a video on that if you're ever interested in converting appreciated assets into a charitable of your choice. I have a video linked up to there about that with Fidelity Charitable. Offers lower costs. So this is the part that I really like, are incurred. So it kind of gives us a little bit of a history lesson of why there are fees associated with your traditional index funds related to overheads and reporting structures, which I thought was kind of neat. I didn't really think about why there are costs associated with particular index funds. But one of the things they talk about it is another cost savings for ETF shares is the absence of redemption fees. So there are some ETFs that have, there's some mutual funds that have redemption fees. So to give an example, shareholders in an ETF to avoid the short-term redemption fees that are charged on some open-ended funds. For example, Vanguard RET Index Fund, this VGSIX has a redemption fee of 1% if held for less than a year, for example, but the Vanguard RET ETF VNQ is the exact same, but it doesn't have a redemption fee. So if you're going to be interchanging these potentially in less than a year, ETFs have a huge tax benefit and also have huge benefits. So This is the one that I'm going to read the two paragraphs here that are really kind of neat. So ETFs have two tax advantages compared to mutual funds. Due to the structural differences, mutual funds typically incur more capital gains than ETFs. Moreover, capital gains tax on ETFs is incurred upon the sale of an ETF by the investor, whereas mutual funds are passed on through the life of the investment. So if you buy and hold an ETF, you're not going to see those, or you buy, hold, and give, like I had mentioned earlier, you're never going to see those. Whereas in short, ETFs have a lower capital gains that are payable upon the sales of the ETF. But if you buy, hold forever, it can be a huge tax advantage. The tax situation regarding dividends is maybe a little less advantageous for ETFs. And there's two kinds of dividends issued by ETFs, qualified and unqualified. In order for a dividend to be classified as qualified, the ETF needs to be held by an investor for at least 60 days prior to the dividend payout. And the tax rate for the dividend rates is from 5 to 15%, depending on the investor's tax rate. Unqualified dividends are at the normal tax rate, which can vary by tax rate almost, up to 40%. So overall, there's some huge benefit of buying and holding those for tax benefits. So that's a little bit about exchange traded funds. Again, I'll leave this there. Let me talk about the particular ETF that I like to purchase on a monthly basis in my taxable brokerage account with Fidelity is iShares S&P 500 ETF. Very huge one. There's other similar ones like SPY and VOO. Those are other comparable S&P 500s that are very popular. So about this particular one, which is kind of neat, it has a pretty low expense ratio, one of the best in the industry at 0.03%. It has about $418 billion worth of assets in this particular ETF, which is one of the larger ones in the world. It's been around since 2000, so it's had some longevity to it. And if you look at the yearly returns, the 3-year return, a 5-year, or a 10-year, it has a proven track record because it is the market. It is when someone says, how are you performing? You don't need to know if you're doing better or worse. You could perform right alongside the market, which can be very helpful. One of the things that's neat, like I had mentioned before, is they talked about transparency. This is a good example where it'll show you the top holdings. A lot of times with index funds, it'll show you the top 10, but it'll leave it at that. Where here you can actually click and it'll show you all of the details of what is held and by what percentage within the ETF itself. So again, if you're looking to try to build wealth and be intentional, after I do my monthly budget, I figure out what resources I have available to add to my investing portfolio. And this is what I'm investing in. Not investing advice, but again, if you want a simple way, doing it with Fidelity through that account, you can buy as little or as much as you'd like and buy it on the open market and watch your investments grow. So there you have it. That is ETFs in a nutshell. Again, let me know if you think ETFs are worth investing in for a brokerage account, or you're going to continue with index fund. Let me know what your thoughts are below. Again, if you have any questions about investing or how I can help you be more intentional with your money, please leave a question down in the comments. I love reading them. Again, feel free to check out some of my other videos where I dive deep into different Fidelity accounts. Thank you so much for watching and have a great day.